With the real estate market starting to heat up in London, with last week having 267 new listings come to market, 203 of those listings were sold, and 21 of those listings were conditionally sold, the market is definitely starting to heat up. With real estate going so fast in London and the spring market obviously heating up, here are the top 5 tips for when you're looking for a house in London. Number 5, get a fully underwritten pre-approval. So the difference between some of the pre-approvals you'll see online, where the computer looks at the income and all of the inputs that you've put in and spits out a pre-approval within 30 seconds, compared to a fully underwritten pre-approval, that is a fully underwritten one is where someone has actually looked at all of your documents and all of your data. So they've looked at your T4s, they've looked at your letter of employment, your down payment information. They've looked at all the documents that the lender is going to want to see when you submit that application once you finally find your house. A fully underwritten pre-approval will immensely increase your chances of getting approved for your mortgage when you finally do get that offer accepted on your house. Number 4, understand the appraisal process. It's one thing to submit an offer well over $100,000 over asking price. It's another thing to have that offer approved by the mortgage lender. So while you may be willing to pay $500,000 or $600,000 for a house that was listed for $400,000, that doesn't mean that the bank is willing to finance it. So the bank could always ask you for an appraisal, and then if that appraisal doesn't come in for the same amount that you've paid for it, then you will be required to cover the difference. For instance, let's say you paid $500,000 for a house, and the bank is willing to lend up to 80% of that. So the bank is willing to lend up to $400,000 if it appraises at $500,000. But if it only appraises at $450,000, then the bank is only going to be willing to lend up to $360,000 on that, leaving the extra $140,000 difference, 500 minus 360, that would be left to you. So you would have to come up with $140,000 in down payment. Now this isn't always an issue, but it's definitely something to consider when you're putting together your offer with your real estate agent. With that said, most houses in London are appraising quite well right now, but it could become an issue if the bank looks at the appraisal and decides that you way overpaid for the house. So definitely always check with your realtor to see what comparables in and around the place that you're buying have gone for. Number 3, for years and years you weren't able to use your child tax benefit as part of your income qualification for your mortgage. A lot of that has changed recently. Although some banks still won't let you use it, there are quite a few mortgage lenders out there that will allow you to use your child tax benefit, so long as the kids are under the age of 12. Some of them will even go as high as 13. So it's good to talk to your mortgage broker to double check to see if you can use that extra little bit of income. With the housing market being so competitive and real estate going up and up in London, it's worth it to get all that. It's worth it to try to get every little extra penny that you can, just in case. Tip number 2, down payment requirements. There were years that went by where London buyers didn't have to worry about going over 5% down, as the majority of our real estate was under $500,000. However, if you have less than 20% down and your purchase price is more than $500,000, then you do have to have a little bit more than that 5%. So the way the insurer guidelines work is that for the first $500,000 you need to have 5% down. For the next $500,000 you need to have an additional 10% down. So if, for instance, you bought a house right on $530,000, you would need to have 5% of that first $500,000, which would be $25,000, and then you would have to have 10% of that next $30,000, so that would be an additional $3,000, for a total of $28,000 down on a $530,000 mortgage. You should also have 1.5% of the purchase price in the bank to cover closing costs. But I just wanted to note that down payment requirements do change after you go above that $500,000 mark, and that's something that London real estate buyers haven't had to deal with much in the past. And finally, tip number 1, check older listings. Although this doesn't have so much to do with mortgage requirements, when London's average housing price is no longer affordable by London's average home buyer, you kind of need to get creative and aggressive when you're looking at what houses are available. For example, as we mentioned, last week there were 267 new listings, with 203 sold and 21 conditionally sold. That means there were well over 30 properties that were not sold last week. Now, if you put yourself in the position of a home seller, if you're hearing after headline about how hot London's housing market is, and your house didn't sold, well, you're going to start to wonder is there something wrong with your house? And maybe you'll be a little bit more willing to negotiate on price. Now, you probably won't be able to buy from that seller for $50,000 over ask, but they're probably going to be a little bit more amenable to reasonable offers than, say, someone whose house just hit the market. I know my clients have had good luck with this strategy in the past, and it's definitely a good tip to think about when you're trying to get aggressive in this market. So these have been the top 5 tips for getting your real estate and mortgage in London, Ontario. Please like and subscribe if you like this video, and feel free to comment below.